the weekly NASDAQ composite new high, new low chart. Looks like it's getting updated on Mondays from Friday's closes, so you can see that the bearish divergence was rectified before. This blue arrow pointed up, red arrow pointed up. Could be a new one showing up here. If you drew an arrow, it would be a downwards trajectory and an upwards trajectory here. We have to give that at least a couple weeks to see what happens there before we can call that a bearish divergence. All it needs to do is get higher than this peak right here. And the main event is the weekly new high, new low. It looks like it's really close to the signal line. I do have the same chart zoomed in, and we can see that the new high, new low line is really close to going above the red signal line for a major buy signal. And it's going to have to be the defensive and cyclical sectors that take us there, and you can see they're all pointed towards the green leading sector here. Energy is up there. Here comes materials, the utilities, healthcare, staples, and REITs. So if those all end up in the leading quadrant, then we might have something there. However, Friday the market is closed, and the major economic report, PCE, we're looking for core inflation to continue to tick down year over year. I think we can put up with a little bit of headline month over month inflation, but if that core gets worse or not any better, it could spell trouble. And I don't think too much buying is going to be coming in when we get close to Friday, as that report is announced on Friday and the markets are closed. So we'll have to see what happens on Monday. If it was a good report and come out of the gate on Monday skyrocketing, we'll get above that signal line here. And conversely, the other way, if it's a bad report, well, I think we'll just skim right off of there and maybe hook around to the downside. And that would be really something, as it's been so long now. This is the big fat cap megatechs carrying the day, so you can see that some of the cyclicals and defensive have been perking up here, and that's what we're going to need to have them step up into the leadership and not have the big fat cap megatechs sink too low. The NASDAQ 100 high-low daily chart shows it's been on a buy signal since the beginning of March on the 6th. The 5 went above the 10, and the 21 is following up nicely here, went above the red back here, so that's looking pretty good there. And if it's a bad report for the PCE, you know that these will be considered defensive, so everybody's going to continue piling into the big fat cap megatechs. And the new high, new low weekly will continue to either skate right above that signal line or just head down a little bit, as the other ones will sink, and the other ones meaning all of these that we just looked at. And the NASDAQ composite itself is not looking good. Of course, these are lagging indicators, these 5, 10, and 21 EMAs. You can read about it here. And it looks like there wasn't enough time for it to turn around and head up. You can see the Compq line here and the NDX line. They're following each other. So that's headed down. That's not going to give it a very good chance to hook around and get back above that 10 for the 5 EMA. So that's not looking too good. And the New York composite looks the same as the NASDAQ composite. It wants to hook around and head up, so let's see what happens. But it all depends on this inflation report coming up. So bottom line for next Monday, come out of the gate buying cyclicals and not so much the defensive staples, etc., but definitely the cyclicals. If it's a good PCE core year-over-year inflation report, if it's bad, then continue buying into the big fat cap megatechs because of their extraordinary balance sheets.